Investment ideas are everywhere, but too often they are borrowed. Tips that don't know your strategy, your risk, or your portfolio. Most investors follow someone else's conviction. Decisions float untested. What's missing is proof. Meet Be Your Own Fund Manager, your personal strategy engine. It starts with a strategy builder that turns your ideas into structured rules. Construction, entry, exit, manage, preview, all set by you. More than a decade of market data flows through your strategy, instantly structured. So every trade, every drawdown, every outcome of your logic is understood. Your rules, your parameters, your system. From building a strategy to testing it against history. Proof is just one click away. Click Backtest. Set your dates and SIP. Minutes later, you'll see the results. How your rules performed, what they earned, period by period. Your own fund built on your own conviction. Don't just follow the market, manage it. Be your own fund manager.
A very warm welcome to all investors present here today, and welcome to one of our first of a kind demo events on Be Your Own Fund Manager. We've been doing a lot of launches on this particular product, and in today's event, we'll just take a step back. I'm not going to launch anything new. We're going to only look at how the product looks today, how you can actually go about using Be Your Own Fund Manager, and definitely towards the end, I would be happy to pick any questions you all might have. I kind of underestimated some of the investors, the strategies you all have made, and not just the complications, but the thought process behind it. And I'm really happy to look at some of the strategies being made by the investors. Also happy to see some of the portfolios already started performing well. I know it's just a week since many of you all have started investing, but I'm happy that some of you all have been able to catch some stocks in the market which are actually moved up quite a lot in the last 1-2 weeks. Regardless, let's start off. A disclaimer for today. All information shared in this webinar is strictly for educational and research purposes only. Nothing discussed constitutes investment advice. Investors should use this material to enhance their own research and understanding. Investments in equity and equity-related securities involve a high degree of risk. Do not invest funds you can afford to lose. Past performance is not an indicator of future performance. Returns are subject to market risk. With that, let's dive straight into the agenda for today. 3 ways you can go about using the platform, right? Before Be Your Fund Manager was launched, I'm sure many of you already were managing your own portfolio in the stock market. And now that this new product has been launched, the first and the most simple way for you to go about in using your own investments with this platform would be simply importing your portfolio. This is the first method I will be showing you all today. Import your portfolio, get a full health report, and then use an existing strategy to change your portfolio going forward. The second one is the strategy templates. Now we've recently launched around 11 different templates. We've given you a choice on selecting which particular template you want to go ahead before starting your investment. I'll be showing you all how these templates are actually designed and how you can use one of the existing templates to create your own portfolio. And the third and the more interesting or the more complex way I would say is building one from scratch. We've tried to make it as simple as possible on the 5 different steps when we go to create a new strategy from scratch. This is useful if you have an idea in your mind or you want to try something which is not part of a particular strategy, but let's say a simple idea in your mind and you want to go about changing or creating a new rule and then sticking and following to that. Apart from these, you can always backtest a strategy and manage it. Towards the end, I'll also be talking about some of the tips, and after looking at how investors have been running the strategies, what are the better ways you can incorporate a few ideas from here on. Okay, so this is going to be the short agenda for today's event. I'll try to keep it more short and crisp so that we have some more time to spend with the Q&A. Okay, let's start off importing your portfolio. Here there are 4 different ways you can go about importing your portfolio into Be Your Own Fund Manager. One, the fastest method is simply linking your MarketsMojo's personal portfolio from one platform. The cash statement, we've also done a demo on this particular one, where you can simply upload the PDF of your cash statement. The password you use is usually your PAN. Once you add those details, the portfolio gets imported into the system, followed by an Excel or CSV upload. And finally, you can simply add stocks manually. Let's say you only want to add 8 to 10 different stocks. Then this method would be the fastest way. Let's hop right into Be Your Own Fund Manager and click on Get Started over here. Right? One is that you can explore a new strategy. Second is you can import your portfolio. I've clicked on Import Portfolio. These are the 4 steps I've spoken about. Now you can import from the MarketsMojo option, which is the closest one. I'll import this particular 4th portfolio over here. Okay, this is the fastest way. We've got all the 10 different stocks I had inside Be Your Own Fund Manager. Now you can see these are the 10 different stocks. If you look at these stocks, you might, get an idea that these particular stocks, you've seen them somewhere. This is nothing but the sector list of stocks, which was released on 31st December. I've picked this as an example. Yes, this portfolio has done extremely well since 31st December. You can see some of the stocks like RR Cabel, KMC Specialty gone up by 80 and 60% accordingly. Right? So this is nothing but our sector list of stocks. You can see over 10 holdings. Now we've given you a portfolio score over here and also the Mojo score distribution to understand, as per MarketsMojo's grading system, how many of your stocks are in strong buy, hold or sell. Right? Followed by a whole holding view at one glance. And how much is in hospital sector, sector-wise concentration and market cap mix. Now to the important part is applying a strategy on your portfolio. Okay, now pay attention over here. I've got a lot of queries as to how this actually works. So let me give you a small brief on how you apply a particular strategy in your portfolio and what happens after that. So now let's say you have a 10 stock portfolio and you're applying an existing strategy which you've created on Be Your Own Fund Manager. As soon as you apply your strategy to the imported portfolio, the first exits which you get is basis your exit criteria. We are not looking at your entry criteria. The first sell transactions you get is basis your exit criteria which you've set. Many of the investors got confused saying that, I had a different entry rule. I've imported a portfolio. Why are you not giving me exits basis those entry rules? No. We will give you the first exits basis the exit criteria set in your strategy. Right? So this is where some of the investors get confused. But still, I'm going to use this particular one, Techno Funda Bullish, with stop loss and fall from high, and applying it to my imported portfolio. Now if you see over here, I'll be just focusing on the exit rules, financial trend negative or flat, stop loss less than 30% fall from high of 30%, technicals grade change if it's downgraded. If any of my portfolio stocks fulfill this exit criteria, they will be exited from the portfolio. The entry criteria would be used then to suggest new stocks in my portfolio. Right? Nothing on the construction rebalance would currently be used. I'll just simply take it live now. Now if you see, there are five different, you can see over here 5 different advices which have been generated: Polycab India, United Spirits, Narayan Hriday, Canfin Homes and IFB Agro. Now why is Polycab asked to exit? If you just click on the rational button over here, right, this R, it will say that Polycab, because the recent grade change, technical was downgraded. And this was one of my rules in the exit criteria. Right, so 5 of the stocks they're asking me to exit currently. What I can do is insert these trades manually over here, right? And I can simply save the trades. Right, so around 4.84 lakhs of cash is maintained in the portfolio now. Right, I can go over here and generate advice for the balance cash. at around 40% of the cash has been generated over here. Right? So this is one way you can go about importing your portfolio and then merging it with one of the existing strategies you have on fund manager. What I can now notice is that few of the investors are actually going about importing the portfolio and many of you are actually creating new strategies. Any of this actually would be helpful for you. There is, it's totally your call over here. You can either go about, let's say, taking some of your investments from your existing portfolio and starting a new strategy instead of straight off taking, I would not suggest you straight off taking your whole investments and, linking it to a strategy and then following that. Because what happens over here is that you need to spend some time on the platform, understand how a strategy works, see if the strategy also works for you, and then spend and allocate some of your money in your existing investments to a strategy you made in fund manager. Right? So you can go step by step. I wouldn't want you to just straight off take your investments and move it to a different strategy. But yes, this is how you can go about importing a portfolio and linking it with one of your strategies. Now, moving to the next part. Let's start from a strategy template. We've launched around 11 different strategies over here. These are the 11 different strategies. They were also announced in the last Friday webinar, right? Growth and dividend large caps. Right, we're looking at large cap stocks and we're entering and exiting basis the dividend yield. High growth, large and mid cap stocks. Here we're looking at bullish moving averages and a positive financial trend and rising rates. Blue chip mid caps. High quality and financially strong mid caps, fundamental uptrend mid and small caps, strong and trending small caps, strong fundamental with strong momentum small and micro caps, strong fundamentals with bullish momentum stocks, high profitability and improving rating stocks, fundamental turnaround and deep turnaround. Right? The one thing most of the investors would be staring on is the CAGR. I would want you all to also start looking at this one ratio, which is nothing but the Sharpe ratio. Right? And any particular strategy now, if you have to compare it, let's say you're comparing two strategies right now. Okay, you might be comparing, let's say, strong fundamental with bullish momentum. Right? This has a 38.4% CAGR. Right? You might compare this particular strategy with the deep turnaround and you will say, okay, this 40% is greater. But please understand the Sharpe ratio, which I'll also be explaining later, is something you need to look at. Because now that you're looking at a portfolio from a perspective of a fund manager, you have to also understand the risk you take. And the Sharpe ratio really calls that out well into helping you understand that the risk you're taking, does it actually generate higher risk adjusted returns, right? So we'll be spending some time on that Sharpe ratio. Right? Churn is another important thing. Now, you might create a strategy which has around, let's say, 55% CAGR or 70-60% CAGR, okay? And a very high return portfolio. But if you don't look at the churn, right, you might end up making a lot of trades in a year. Right? Some of the portfolios I'm seeing, which many of the investors have already started, the churn is as high as 6 or 7x. That's not a portfolio, right? That's going to be a very fast trading strategy. So keep your churn below 3, okay? Closer to 1 is better. I know it's not possible to have it way below 1 because there is always churn going to be happening, but don't go for a portfolio with a churn of 4 and 5x. You'll be just simply trading your stocks. If you're comfortable with that, it's okay, but please now also start looking at the churn of your portfolio. Right? We also have maximum drawdown. I'll also be spending some time on this particular ratio. Finally, alpha and the number of stocks we're suggesting. But yes, these are the 11 different strategies we've launched on the Fund Manager portal, which are also available under this suggested strategies list. Right? Now, as a legacy enterprise user, you can also look at all the strategies available. Pricing has changed now for enterprise plan. At 1,25,000, we are giving you 10 portfolios. Right? 100 backtest and 10 suggested strategies. The previous enterprise plan has now closed. There's Pro available at 60,000 a year and basic at 25,000. Right? In case you would like to extend or even upgrade, the links are available here. But yes, as an enterprise user, currently I can see all the different strategies over here. Right? Now, there's one particular strategy I've taken live, which is fundamental turnaround and bullish momentum stocks. right? And there are 11 different strategies over here. Let me just open up blue chip mid caps, for example. Now, any suggested strategy you open up, there is a small write-up and some of the key things you need to look at before investing in that strategy. For example, churn is a bit lower over here with the mid cap. Holding period of the stocks is approximately 7 months, which is still fine, right? It has a 20.19% CAGR versus Nifty's 13%. Right, this is how you can see the portfolio. If you want to just look at it in a normalized way, you can look at the logarithmic way, but simply the linear returns. Right, we'll be spending some more time on the backtesting and reading the whole backtesting report. But if you would want to, unlock any particular strategy, since all of my strategies are unlocked, there's no unlock button, but you can unlock it from here just by clicking the unlock button below. Now, this is a suggested strategy. I can take this particular strategy live. Right, let's say I can invest 2,50,000 rupees to start with, and this will now allocate that 2,50,000 to approximately 4 to 5 stocks, because that is so these are the 5 stocks which are being recommended: Multi Commodity Exchange, Hindustan Copper, Lloyd Metals, Radico Khaitan, and Oracle Financial Services. I can simply click on accept all and proceed. So now I can follow a suggested strategy, right? The market is closed, so nothing's going to move right now, but this is how I can use a template to take a portfolio live. Let's say it's now 2 weeks down to investing, and I believe that I want to make some changes in this strategy. So this edit strategy button over here is very helpful for you to make a change in your live portfolio. It is possible that you go live with a portfolio, you're investing in it for the next 3 months, 6 months, and then you say, you know what, I want to make a few changes now. Edit strategy is where you can start with, right? Let's say you want to, let's start with construction, for example. And let's say you don't want to keep it 5 stocks, you want to make it a 10 stock portfolio. And I know it's only mid cap allocation, but let's say that you start taking some small cap allocation, with some reason to improve your returns, but also, you will have higher risk if you increase your small cap allocation. I'm still taking that change over here. You can make any changes over here, and if you don't want to do it on a regular basis, as and when weekly, and you can update the rules in your existing portfolio. So number of stock count is also changing, which I've increased from 5 to 9. I can apply the changes, right? And I can make a change in this particular portfolio. Now, next time I generate some more cash, or let's say there is cash available, okay, in my portfolio, or let's say I want to add more investments. Instead of 2,50,000, I add more 2 lakhs in my portfolio. Right, I have got some 4 new stocks to enter in, because I've just increased my number of stocks from 5 to more, and then I can invest in these more stocks which have been suggested. Right, so this is how you can go about using a suggested strategy, and then making changes to it, and then go about investing. So if you are, let's say, a bit fresh with investing, and you want a template to start with, this is the better way to go ahead. The third way of investing with Be Your Own Fund Manager is building a strategy from scratch. Now, many of the investors I know who really like experimenting with rules would and have followed this particular way of creating a strategy from scratch and following it like a, let's say, a satellite portfolio, not your core portfolio. Ideation, then turning it into rules, testing it, which is very, very important, and then running it. Right? You can start from a thought or edit and discover as you build a strategy. Construction, entry, exit. Right? We know these 3 important methods while creating a strategy from scratch. Very important is please backtest it. Right? Don't go with the risk of not backtesting it. Many of the enterprise users have unlimited backtest, so you can definitely go ahead and backtest it. Pro, even you have 50 backtest. There are also 10 backtest in basics. If you're going to invest in it, you definitely should backtest against the history. And finally, then you can run and let the rules watch, right? So now what I'll do is, I've created a very simple strategy, okay? I'm calling it the simple turnaround strategy, right? What this particular strategy does, it enters in a contra method. With the stock is strong sell and sell, I'm entering. I'll exit when it's strong buy. I see now this is not possible to do it manually on MarketsMojo because you need a platform to help you do it. But what I'm doing over here is entering strong sell and then exiting when it's strong buy. Stop loss at around 30%, fall from high at around 30%. I'm making it a 15 stock portfolio. The reason I'm doing that is I don't want excessive churn and making it a very small portfolio. I'm making it a much more wider 15 stock portfolio. Maximum per sector around 40%, rebalancing on daily basis. So I'll quickly go to the website under strategy builder. Right, this is the one strategy which I was creating. Now, a CAGR of around 52% versus the Nifty's 13.15%. Now let's go a bit slow on this particular slide and let's read each of the backtesting report, each of the elements. Right, some of them I know many of you might be just skipping them very fast. But let's break down each of these elements. The first one is simply whether the backtesting worked. Right, yes, it worked. Definitely, it has made more. 1 rupee grew to about 25 rupees over 8 years. Right, market has grown 1 rupee over to around 2.6. So it's 9.8x times more. Periodic returns, it's generated positive returns in the last 1 month, 3 months, 6 months, 1 year, 3 year, 5 years since inception. So it has a consistent way of performing. And if you look at the calendar year returns, only one particular calendar year it's underperformed. Rest all of the years it has outperformed. 2025 has been a very difficult year for investing, I would say, since COVID. Right? 2020, even though we might think that it had a very sharp fall, the recovery was much faster. 2021 investors enjoyed, 2022 investors enjoyed, 2023 investors enjoyed. 2024 September till date, it actually pulled out the real message of investing in the stock market, right? When things don't work out. So 2025, it's given a negative return. 2026 year to date, it's doing extremely well with a 14% return. Right? If you want to look at it financial year wise, you can also look at it based on the fiscal year. Now, a comparison between how your portfolio has done versus the benchmark across these different ratios. CAGR, nothing but compounded annual growth rate. The volatility, right? Important to understand that how much your portfolio is moving upwards and downwards. The Sharpe ratio, which I'm going to break down in the next slide. Sortino ratio as well, right? Calmer ratio, maximum drawdown. Now please understand over here that you need to compare your Sharpe ratio with the benchmark, but also with its individual number. Okay, I'll be giving you some bands to understand it better, right? It kind of gives you an adjusted way of looking at your returns. Anything above 1 is considered good. Even Sortino ratio, it removes the upside risk, just looks at the downside risk. Right? Maximum drawdown, please understand over here, if it is in line with the benchmark, then it's something good. In a very rare cases I've seen in real life scenarios where the maximum drawdown is less than the benchmark. But if it's in line with the benchmark, trust me, you're doing quite well. Right? Current drawdown over here of 0.64%. Number of positive days, number of positive months. Right? If you see in the strategy I've made, it's higher than the benchmark. Then we have beta. Right? How closely it moves with the index. Over here is Nifty 500. Right? Correlation with the index. Right? Tracking error, information ratio. These ratios are more important if you're trying to just benchmark or mimic an index. So you can ignore these two, because here I see many of the investors over here making a portfolio to beat the benchmark, not to track or let's say have it closer to the benchmark. These are some of the extremes. Churn and turnover, the reason I'm actually showing you this particular portfolio because it had a lower churn. I had a few more strategies which I was experimenting in, but the churn was much higher. The churn over here is slightly lower, 1.43x, right? 75 trades per year. And average holding period of around 271 days. So you don't have to, let's say, sell and buy much more if you follow a strategy like this. Now these are the current holdings. Right? Himadri Special is given some 60% return. Tilaknagar Industries. Right? SG FinServ giving some 95% returns. right? Now, if you see here, it's heavily allocated to small caps, primarily because the small caps must have done well. There's been no allocation happen to large caps. It's mostly mid, small, and micro. So if you, let's say, reduce your small cap allocation in this portfolio, then most of the returns would not be made. Most of the allocation is in specialty chemicals, but we have a healthy allocation across all different sectors. You should notice that this allocation to any particular sector should not go above 30%. You're going to take a lot more risk if it goes above 30%. A very interesting thing to look at, it's much more important to look at this, because what we do is that we avoid looking at it phase-wise. So there's pre-COVID, COVID crash, right? Post-COVID bull run, which is where most of the portfolios have done extremely well. Even the 2022 to 2024 bull run, but this is a much bigger period where you can see 437% returns. Wari Renewables is one stock which this particular strategy has been able to identify, and you all know how Wari Renewables had performed, especially in the 2022 to 2024 period. There was a small cap correction which happened. You please understand that the small cap correction, the portfolio has fallen more than the benchmark, primarily because this strategy has more small caps. Right? It's nothing to be surprised about. This particular strategy is over allocated to small caps, and the recent recovery has been well. Obviously the recent recovery, the small caps have also moved up. I think even in today's market, if I'm not mistaken, small caps were ended in positive, if I'm not mistaken, versus let's say the market actually not doing that well. So you can see some recovery happening, especially in the small cap zone. Then some of the top and the bottom contributors over here, biggest losers. Right, yesterday small cap actually was up by 0.27%. And then the market cap contributors over here. Many of the investors have seen the transaction history. One important thing is that you can also download a transaction history and actually go about into checking what particular stock has entered, why it has entered, why it is exiting, right? You can simply download the CSV and go into much more detail, and the dividend history as well. So this is your full backtesting report. Now, don't rush this process. Ideally, you should spend more time into actually looking at how your particular strategy has done. There are a few ratios you need to look at, which I'll be talking in the next few slides. Please spend some time on them. If you don't actually understand those ratios, what you'll be running after is returns. And trust me, this is one of the biggest mistakes you could make as a portfolio fund manager using this particular product. Right? Don't simply run at that CAGR figure. It's important to get returns, but there are a few ratios I would want you all to look at before you go about investing in any of these strategies, right? I've taken all across the whole backtesting report. But first, and the most simple one I would want you all to look at is the Sharpe ratio, right? It's nothing but if you just look at the numerator and denominator, it's portfolio returns minus the risk-free rate divided by the standard deviation, or nothing but the movement of the portfolio moving up and down, right? The volatility we talk about, right? It's basically how much you've, right? If in other words, how much you're going to gain, right? Gain with respect to how much returns you're going to make in the market. The reason we are actually reducing risk-free rate over here, because that 6% which you're going to make, you can rather put it in an FD and make it, right? So it removes the risk-free rate over here and divided by the amount of risk you're taking. So it's nothing but the gain and risk. I'm making it in much more simple terms for, let's say, an investor who doesn't, I don't know, many of you all understand or are very good at statistics, but it's nothing but the gain you make versus the risk you take, right? That's your Sharpe ratio. Below 1, it's kind of weak. 1 to 2 is good. 2 to 3 very good, and trust me, if you're getting a Sharpe ratio above 3, please mail it to me as well. I would like to see your strategy, right? Above 3 is exceptional. Over a long period of time, the Indian equity indices sit to around 0.5 to 0.8. So above 0.8 basically would be very good. And if you're getting something much more above that, then I would really want to look at your strategy, right? I know this might be a bit difficult for you to understand, so giving you some better way to look at this particular, if you just give me the whole screen, and this is the same ratio. This green path is nothing but the smooth part over a period of years, the returns you make. But none of the portfolios move in this green line, right? Your portfolio moves like the orange line. You see this orange line over here? That's how your portfolio moves. Now let's say if I increase the volatility of my portfolio, let's say it goes up and down, up and down, up and down. In the end, I'm reaching to the same point, but you see my Sharpe ratio is much weak over here because I had to move a lot more. There was a lot more volatility, or let's say deviation happening. This is why my Sharpe ratio is lower. A portfolio like this orange line you see over here would definitely give you a nightmare. But a portfolio like this, let's say I'm going to reduce the Sharpe ratio, reduce the volatility. A portfolio like this, which moves in a very straight line, right, has a better Sharpe ratio. So if your volatility, or let's say the movement in your portfolio is going to be much higher, your Sharpe ratio moves. Right? So something close to 1 is good. See, this much movement will happen in the market. You're investing in the stock market, right? You're not investing in a fixed instrument or a very safe instrument. So it's possible that some churn is going to happen in your portfolio in the life of your investments, right? But the closer it is to its final path, the better it is. The higher the volatility, it's problematic. Right? A very similar ratio, the Sortino ratio. This is the same as Sharpe, but you see the only difference in the denominator is that you're only looking at the downside deviation, you're not looking at the upside deviation. Because obviously if the portfolio is going to move upwards, you're definitely, that's definitely beneficial for the portfolio. Right? I intentionally wanted to avoid this one over here, but I think some of the investors must have got it. I would suggest simply look at the Sharpe ratio. Right? The Sortino ratio is nothing, but you're only looking at the downside risk. And finally, a very important one is the maximum drawdown. Over here, please understand, this is where most of the retail investors panic. This is where you actually get scared when you invest in the stock market. You reach one particular peak in your investing journey, and from there, if your investments fall by 20-30%, we do panic. And it's totally normal. I know many of the investors saying that you should not panic होते हैं stock market में, but in the end, अपना ही पैसा है और we are the only ones who are going to panic, right? It's not going to be the neighbor. Now, if your portfolio, let's say you invested 50 lakhs, and that 50 lakh portfolio, after let's say a few years, just a random example, has become a 1 crore portfolio now. Right, from 50 lakhs to go to 1 crore, it was a 100% gain. You know how fast you're going to reach back to 50 lakhs? Let's say back to 70 lakhs. A 30% drop from that 1 crore gets you to 70 lakhs. So it took you 100% to reach there, but a 30% to come halfway. My point is that maximum drawdown is very important for you to understand how much risk you can actually take. Right? It looks very simple on a number over here. Let's say, I've fallen by around 60%, or 130 falling over here. To come back to that level is going to take some time. It's not going to be that easy. So my point is that if your maximum drawdown is going to 40-50%, please rerun that strategy. Try to keep it by around 30-35%. I know some of the investors can stomach a 50% drop in their investment. I've seen that. Right? Some of the very veteran investors, but something close to around 25-35%, you're safe because we've seen the market also fall by 35%, right, during COVID. But anything much more than that, then there is something wrong. You need to actually kind of tweak your portfolio. Right? You kind of have to make your strategy a bit better if you want your drawdowns to be checked. So 2 things I would want you all to look at from today when you are going to create a strategy or invest. You must have already started a live portfolio. That's fine. You can edit a live portfolio. We've given you that option. There was a big debate on whether that option should be given, but throwing a product like this, which is a bit more complex to a retail investor, we've given you that option to edit your strategy once it's already live. You can take a step back after this event, go and actually see what's your drawdown in your backtesting result. What's your Sharpe ratio? Have you only ran and looked at CAGR? Then that is something which you have to take a step back. You need to look at the Sharpe ratio and you need to look at the drawdown of your portfolio before you go about simply investing ahead. Right? So these are the 2 different ratios I wanted to talk about, Sharpe and the drawdown. I'll skip Sortino for now. We'll be looking at some other ratios next time. But yes, these 2 things are something you need to look at in your portfolio. Right? Now, once it's done, what I suggest is take it live and monitor. Right? Alerts, I think some of you all have started also getting WhatsApps today. You get an email. We have 3 different alerts which go to you. The first one is if your backtesting result is ready. I know some of you will hit on backtest and view later. You'll simply get a WhatsApp immediately after your backtesting is ready. If any of you are not getting WhatsApps, I'm not talking about emails, WhatsApps, please write in the chat box that you're not getting a WhatsApp. Please check your WhatsApp if you're not getting it. After your backtesting is done, and let's say your portfolio has a cash available, then you will get a alert on that as well. And if any of your exit rules have been triggered, you'll get an exit WhatsApp and a mail. We are not mentioning the reason as to why has the exit happened. This is available inside the portal. We are not trying to do that because I know many of the investors have one account and they just broadcast it to their friends. So, this is something we've taken a conscious call. You can simply click and come on the fund manager website and where you have a secured login and then see what changes have happened in your portfolio. So there are no stock names, scores or prices. You have to log in to see those particular things and then you can execute it, right? We have left the execution at your end. So there might be a stock which we are asking you to exit and you're like, ठीक है चलो थोड़ा और ऊपर जाने दो. That is up to you. There's a lot of adjustments you can do it in yourself, which is not there in something, let's say, like a portfolio management service or let's say an infinity investment or model portfolio. There's much more freedom left in your hand. So use that with some caution, right? 5 things that are tripping people up, which I'm seeing in our fund manager, is that overfiltering. I am seeing a lot of investors only have 20 eligible stocks in a 10 stock portfolio. उसमें क्या होगा सर कि आपको कोई नया सजेशन इजीली मिलेगा नहीं, right? So keep the universe a bit wider. Don't go with heavy filtering, right? Don't go with adding a ratio just because you want to do it. See, please understand that the Mojo score grade which we've created is a very, very strong filter which takes into a lot of considerations. Now, if you want to use ROE, ROC and other important filters, you should do it. But don't go into making your strategy into a very confined universe. You need to open it up so that there are better ideas coming into your portfolio, right? I'm seeing investors put a stop loss of 5% that works well with a trading strategy. Please don't put a stop loss of 4 to 5% in a long-term investing strategy. Primarily because a stock can fall 5%, 10%, 20%, 30% भी stock गिरता है सर, और फिर वहाँ से उसका growth start भी हो सकता है. So you are going to miss out on a very, very promising stock primarily because you made a very short stop loss. So keep the stop loss at 25-30%, right? Avoid backtesting for few months and just 1 year. Please understand, if you want to use a backtest for 1 year, there should be a reason. Now today I was creating a strategy of only banking and finance stocks. What I did is I excluded all sectors. I only kept private bank, public bank and finance because I'm seeing the results of these banking stocks. They're doing well. Now I purposely used it for 1 year. Now you don't have to use it for 1 year. You should use it for, let's say, 8 to 10 years. We've given you that history. We've given you that freedom. We are allowing you to test up to for 10 years down the line. Right? Use that. There's no extra charge for testing for a longer period, right? Use that, but don't use it for a very short 1 year period. I've seen this, handful of 8 to 10 investors editing the strategy every day. I know you're investing in that, but let's say you had a large cap strategy. Abhi large cap Nifty Nifty fell down today, did not do well. And just because of 1 week, please don't edit the strategy. So give it some time, right? Or don't go about editing a strategy just because of 1 bad week. What will happen is that you will end up only editing for your entire, let's say investment journey. If it's, see what happens is that your strategy might not work well in a particular period and your friend's strategy might work. And then his strategy might not work well in a particular period and then your strategy might work in that period. Your goal is to look at how your strategy works over a long term. So if it's 1 bad week, 2 bad weeks, don't go into editing. There might be a mistake you made. There might be a genuine mistake you made or something which you did not want to. Then you can go and edit. Please don't go and edit in just 1 bad week of a market movement, right? These are some of the things I just thought I'll highlight because I have seen many of the investors doing that in the back end, right? With that, the question answer session is open, right? There's a basic pro and enterprise plan available for some of the new investors who would like to try it out. And let's go ahead and pick up some of the interesting questions come in by the investors. I'll start off with the first question by RC Patel. Is it the right time for investment Are you asking in today's market? Yes, people are a bit jittery. There is little fear in the market also. We're seeing it happening. Right now, it's a great time for investment. A great time to pick up some of the stocks. I would not say now is the time to actually be worried about. You can definitely go about investing right now. Rajesh Kumar is saying you're unable to import your portfolio from SBI Smart. Bashir, if you could just pass that question to the feedback team and let me just ask them to check this up as to why the investor is not able to import from SBI Smart. Jayant, you said that hi Jason, is the bug I reported during launch resolved? Yes, it's definitely resolved. I think we also replied to you, sir, Jayant. I'm asking because I don't want to waste the limited number of backtests by trying again. If you remember, I reported not using. Yes, this is fixed, sir. I would we've rerun that as well. I would ask you to kind of check it once or yes, this particular thing has been fixed. This was fixed on Saturday itself. Run it once and check. Just let me know in case you're still getting an error. Write to me and I will reset that one particular backtest for you. You don't have to be worried on that. So you can please rerun it once. Then this one by Pallavi Shah. In backtested strategy, I selected 15 stocks for 2 lakh fund, but in live so far it is only recommended to buy 5 stocks with the entire fund. It can be possible. I'll tell you primarily because you need to, you might have to increase your investment limit to have more stocks in your portfolio. But still, if you can just write the strategy name in the chat box, what I'll do is I'll ask someone to actually just go and have a rough check into the strategy you've created. Also, please provide an option to differentiate alcohol beverages, aquaculture, meat processing industry separately. So I'll see if this is possible because we get a sector classification from the data provider and we stick to that. But I'll see if it's possible since it's in fund manager and we can have some changes happening. Right, this one by MSK. I have a queries. I have messaged on the same as well. Still awaiting a response. Couple of questions from the same are realized P&L not included in total returns during the imported portfolio. When the strategy is implemented on an existing portfolio, it recommends existing few stocks and I sell it. Then the realized profit or loss from those stocks do not appear in the total return. And the reinvesting issue, yes, definitely. The team have asked the team to resolve this. It's not yet resolved. You're talking about exiting and then reinvesting. Yeah, I think there's some glitches happening in few of the portfolios, but definitely this will be resolved. It's already prioritized. The team is actually checking on to why this is happening. Your first part of your question into whether the realized profit should also be counted or not, we had quite a good debate on this. So what we are kind of doing over here is that after you import your portfolio from that day onwards, we are now looking at it as a fresh portfolio. What you're looking at is that there should be some portfolio return tracking happening since your existing investment has happened. We were planning to give 2 options to the investors to look at returns. I'll check this with the team and see if it's possible to have a tracking from your imported portfolio since the day you're tracking it and a separate return tracking after it comes to fund manager. Right? This one by Ranjit. In suggested stocks, if we reject and add some stocks to the negative list, is there an option to remove those stocks from the negative list later? So if you just simply come to the fund manager section over here under live portfolios, if you click on any of the live portfolios, we've kept a tab called exclusions for you over here. So now let's say I don't want FMCG, aerospace and defense and I save exclusions. Next rebalance and then I can remove it from here. So this exclusion tab is something you need to look at under your live portfolio. Right? So this is your first part of the question. If you can also flash the question, Bashir. This is by Mr. Ranjit. But yeah. Second part is when we add stocks manually, there is an option to update the price, but can you provide an option to increase or decrease the quantity as well? So if you're talking about adding stocks manually, let me just check that up. So under import portfolio, you can do add stocks manually. Let's say I want to add TCS and I have put in my date of 3rd August. I've got the price and you can add in some quantity. Yes, you can actually increase and decrease the quantity if that's what you're asking. This is where you can increase, decrease the quantity and you can add more holdings and or remove this one. You have given entry and exit parameters, but what about target price as part of exit parameter? Is there an option for target price? So when you create a strategy, sir, this is your profit booking is nothing but a target price you can set for a stock. If I put it 50% more 50%, it will sell when the gain has reached above this average from the average cost. So this you can set it as a target price. Right, so I hope all three of yours has been answered. If there's anything else, definitely please let me know. This next question by Veena. There is an issue in accessing the Infinity website. You're asking me. Yes, there was an issue in the morning as well. Please try to check in now because we had fixed it up. I would suggest you, in case it's still happening, I would suggest you to do a hard refresh. Nothing but just hold control and refresh. But I don't think that would be the problem. It should now be fixed. So please, if you could check it now. If it's still not happening, Mr. Veena, you can write it back and I'll ask the team to check it right now. Can you share any strategy with more than 2.0 Sharpe ratio? I don't have it right now with me in front of me. And I don't think I have reached close to 2. I was doing a few and it was at, I think some of our suggested strategies might be at 2. Just give me a second. We have one close to 1.61. You know, it's very difficult to reach something like a 2 or something on that way. But in case I get into something with a Sharpe ratio of 2, I'll definitely let you know if it's possible. I've gone close to around 1.66, 1.7. So I don't have it something picked up here. You can kind of backtest and see if you're reaching close to a Sharpe ratio of 2. This next one is that by Mr. Bharat Mehta. Are all the 5 Infinity portfolios more or less to be are replicating more or less to be Bureau Fund Manager scheme? I'm happy with the Infinity portfolio. You don't need to switch to this new product. So the Infinity portfolio and IP is different. It's strong. It's tested. I'm not going to disclose the returns over here. It's available on the website. They've done extremely well, and you don't need to switch from Infinity to here. See, this is something more for investors who like to have more control on the investments. Right? If you remember the launch of Bureau Fund Manager, which happened back on June 5th. What we realize is that even though there are products like Infinity or let's say PMS or model portfolios or everything available, in the end many of the investors love to handle it by themselves. Something like I like to do, even there are so many products available. I would still love to monitor my own stocks and enter the stock because there is there's some control I have on my investments when I do that. This product is for those investors who let's say would love to invest and create their own strategies and portfolios. That's why I also included suggested strategies for you, primarily for the reason so that we can give you a blueprint or a template to start from. But yes, you can definitely go ahead and kind of not simply just invest or like say start fund manager if you have an Infinity portfolio which is already made with a strong IP. Praveen, you asked a question, why is range provided to enter a stock price manually? We are giving you that range, sir, because it will be helpful for you to select within that range. It's just a better user experience. Let's say you select, I have invested in TCS on 14th of August 2026, 2025. We're giving you a range because that's the low and the maximum price it has traded in that particular date. You can't actually invest if that stock is not traded in that price. It also helps investors from fat finger errors or let's say you making some error by mistake. So we've kept that range for you. This another question by MSK. The name of a strategy cannot be edited after it has been backtested unless it is made live. It would be useful to have an option to rename a backtested strategy after deploying it. Also, you mentioned on the RSI filter, the team is also checking the RSI filter. I think the number of stocks drops down to very less after you add the RSI filter. Also, could mildly and mildly bearish categories be introduced similar to the classification available for MACD? Let me check this as well. Bashir, if you could send this feedback to me and we'll have a look at this post this event. This one by Rajendra Prasad. Advice was generated for fundamental uptrend mid and small caps. So are you replying to a previous question we asked? Okay, I'm not getting the context of it. Also, I have a doubt with respect to stock overlaps which might get into single stock exposure. I don't think a stock can overlap, but if you can, elaborate more, I'm having a look at the chat box. If definitely you want to elaborate more on that, I will, check this up. Bharat Mehta, you said in infinity portfolios while entering transactions manually, the input price may be more or less than suggested by you. In that case, brokerage amount is locked and cannot be changed in accordance with the buy and sell. I'll check this up. Are you referring to infinity portfolios? Then I'll have to check this up. Yeah, it can be more or less, but not lower than the low and the higher than the max of the stock traded for that day. But we'll definitely check this up. I think that's it with most of the questions received today. Thanks a lot for joining in. If in case you would like to, let's say, learn more about this product, I can also do one thing is, also possibly if you would like to have a demo by the team from this product, it's a bit more difficult to understand. You can, definitely drop it in the chat box if you're interested. I can also see if it's possible to give a free backtest for the investors who joined in today and would like to learn more on Fund Manager. Looking forward to seeing you all come for the events. The pricing links are also available below the video. We'll be having our latest editions event tomorrow where we'll be talking about the new stocks that have entered our Mojo 1 strategies. I think there would be a PMS webinar on Thursday and we'll see if there's something interesting happening on Friday as well. Looking forward to seeing you all come for all the events this week. Goodbye and have a great evening going ahead. Thank you so much.
Investment ideas are everywhere, but too often they are borrowed. Tips that don't know your strategy, your risk, or your portfolio. Most investors follow someone else's conviction. Decisions float untested. What's missing is proof. Meet Be Your Own Fund Manager, your personal strategy engine. It starts with a strategy builder that turns your ideas into structured rules. Construction, entry, exit, manage, review, all set by you. More than a decade of market data flows through your strategy, instantly structured. So every trade, every drawdown, every outcome of your logic is understood. Your rules, your parameters, your system. From building a strategy to testing it against history. Proof is just one click away. Click Backtest. Set your dates and SIP. Minutes later, you'll see the results. How your rules performed, what they earned, period by period. Your own fund built on your own conviction. Don't just follow the market, manage it. Be your own fund manager.